Okay, so it's another EPTA Insights review or a trade recap. And this time around, we're reviewing a trade that we took on Tuesday, the 23rd of January, on the New York session kill zone. So without wasting any time, let's get into the charts because we want to make this reviews as brief as possible. So there's what we had on EURUSD going into the 23rd, which was on Tuesday. We didn't have any high impact news. And basically what we see here is the 4 hour time frame. As you can see, the time frame is on the lower bottom right hand side of your screen right here. So we had this fair value gap here, which is a CB, right? It's a 4 hour CB. So we saw price trading into it on this day. And then what does the next day do? This was on a Friday, right? Fails to take out this low, forms what relative equal lows, right? It's rejecting off the CB and forming what relative equal lows. Okay, no, fine. So it goes on onto Monday. You know, Monday is usually used as what accumulation of the range, right? So Monday does what accumulates. As you can see, it takes out the previous day's high, which was Friday's high, right? And then taps into what? It taps into the same 4 hour CB. Now, what do we see again? We see Tuesday doing what? Rallying above that same uh, 4 hour CB, but this time around we are feeling what we are tapping the high end of the CB, right? Which is what the high of the fair value gap. So we have what an FFVG, right, on the 4 hour. What is that? The full fill of a fair value gap. That's what I annotate as the FFVG right there. So we have fully filled what this fair value gap. We had fully filled this inefficiency right here, and now price might just as well do what once we reject this old high and this inefficiency high, then we might start attacking sell side right here, sell side right there, and our drawn liquidity was what this relative equal highs, equal lows rather. As you can see, that these levels are too clean, and price will look to attack those since they're harboring most liquidity. So another factor that we was incorporating into this analysis was that price was forming a three drives pattern, right? ICT teaches about that. A three drives pattern is whereby a price attacks, in this case, a premium array and keeps on taking liquidity as it does what? As it attacks that premium array. There's a signal to say on the third drive, we're bound to respect that premium array and reject off it and start trading lower. And you can flip that logic for buy side. So what did we have on the hourly, particularly on Tuesday? So there's what the blue line is the midnight opening price, which is the New York midnight opening price, right? And we have that fair value gap high, which is a CB high. So we open at New York midnight, we rally higher. What are we doing? There's 1 a.m., 2 a.m. What is that? London kill zone. What do we know about a classic sell day template? London will most likely form the high of the day, right? And then we will see New York retracing into a premium array before we can sell off to attack the remaining draw on liquidity. And you can see that, right? We trade higher and then form the high of the day on London, and then we break lower, right? We break all the way lower. We have a change in the state of delivery right here once we close below this down close, up close candle rather, right? Or you could be using that because we have this breaker here. Once we close below that breaker, then you'd have your change in the state of delivery, but it doesn't really have much significance in this case, but you can incorporate so many concepts into your analysis. So once we got that, during New York time now, right, from 7 to 11 a.m. New York time, which is the New York Hill Zone, what did we have? We had this large CB here on the hourly, right? There's the hourly time frame, large CB on the hourly. But looking at it, we realized as a team, as viewers are analyzing this market, we realized that the CB was too big for price to rebalance, right? As it was in a much hurry to do what to deliver to the sell side. As we was looking at the Dixie, unfortunately, I don't have the dollar index chart here. I could be showing you the reasons why we opted for a fair value gap overlapping with what an old low, right? There's a fair value gap overlapping with an old low. Which low is this? There's Monday's low. It's a daily, previous daily low. So it's an important premium array in this case. So we're trading into a 1 hour CB overlapping with that daily old low. So we trade off that, and you can see how we respected that Monday low, and then we trade lower, right? So we'll look at the chart on the 3 minutes. Unfortunately, we don't have the 15 and the 5 because they weren't very much clear as we would like them to be. So before going into the chart, there's how we was looking at price as it was printing out. And we didn't enter on this trade while we were still busy annotating and deliberating over these markets. But I'll get into uh, the entries and everything on the next slide. But there's just to show you what there's not hindsight. It's not edited. It's not anything that is of malicious content or anything of that kind. You feel me? So there's purely what we were studying on Tuesday. Now, what do we have? We got this on the 3 minutes. We are rejecting what? We are rejecting of that 1 hour CB level that is overlapping rather with what the Monday low, right? Monday, which is a previous daily low, like I said. So what do we have? Right here at around 9, we push higher, we form a breaker since we're taking out liquidity here and we're taking the low of Monday. So we have a breaker and an order block and what? A fair value gap. So a breaker overlapping with a fair value gap, that's the ICT unicorn model. You might be willing to sell that area, but I'm very much skeptical on selling high resistance, not high resistance, but the low risk sell, right? I'm very much hesitant on selling that. But all in all, nested PD arrays, this would have been a good area to sell at, right? You'd be selling on that order block, incorporating that fair value gap and that breaker. So that's a strong level of what resistance. So right here, you could have been selling here, putting your stop loss where, putting your stop loss on that intraday long term high right there. So where did we get our entry? So we broke lower one more time and we left behind what? An order block right here and what? A fair value gap. So two nested arrays. Again, we sold off this fair value gap area, right? And then we broke lower, forming what? Another CB. Look at how huge this fair value gap is. So I was looking at if whether price was willing to trade all the way to the high of that CB and sell off that area, right? If it's going to respect that CB high, then I'll be willing to sell off consequent encroachment and higher of that level, right? So I was waiting up on price to give me that push higher. Even if it fell short of that CB high, I could have been selling above the consequent encroachment just to reduce what? To reduce the risk that I was being exposed or I was exposing myself to. So that was the second entry. We had the first entry of this fair value gap, the second entry of that CB high on 3 minutes, right? We're trading off the 3 minutes time frame. Keep that in mind. And then we break lower, we form what? We are confirming this order block. We are confirming this up close candle as an order block. So when you are on the sell side of the cap, right? I'm going to slow down here. When you are on the sell side of the cap, you want to see up close candles supporting price lower. You want to see up close candles providing resistance. So right here we have up close candles, trade into them, break lower. Up close candle, trade into it, break lower. Up close candle, trade into it, break lower. Up close candle, that was our third entry right there. Once we got into this order block, I sold off more positions right there. So somewhere around here, price formed a 15 minutes fair value gap, and I was looking at the fact that we might have a deeper retracement back into a fair value gap. And right here, this whole retracement that you see tagging this order block for the second time, there's a retest of a 15 minutes fair value gap. Fortunately, I don't have that slide on this presentation, but you can see how this up close candles are still holding price, right? We come back into this up close candle and that up close candle with that week right there, retesting the 15 minutes fair value gap. You can see that on your own chart. So what I did was once we had this potential retracement, we took off our position or our positions on a 1:3 RR ratio, right? So we didn't get the rest of this move and we didn't get the rest of that uh, drop on the 1 hour. So let me show you where we entered and the 1:3 that I'm referring to. So this is our entry, our stop loss where stop loss on this uh, short-term high right here. So we're trusting what this high not to be broken, right? It's a low risk sell, so we're trusting that it will hold. So we sold here, took the first partial somewhere around here. The last ones were in this order block, as we was now anticipating that 15-minute fair value gap retracement. So all in all, these are the entries because we don't want to be dealing with this stuff in hindsight. As you can see, the first entry of that fair value gap overlapping with what, the order block. So there's the first leg of distribution, low risk sell right there, and then we come back into what, once we retest that fair value gap high, we sold off one more, and then once we retested this order block, another sell position, and then we get off our, as I was saying, we got off our position here, and then the last of them, the remainder of the positions of that order block, and we retested that 15 minutes fair value gap that I'm referring to, and we sold off completely. So with that being said, I hope you understand how we maneuver around the New York session. And the classic buy and classic sell days are basically the bread and butter setups that you should be looking for. They're the easiest, the very simplest of trades to take. So with that being said, see you on the next review. Oh, but before I go, okay, it was a bloody week. It was a messy week for the team. We had trouble navigating price action from Wednesday all the way to Friday. There's me being transparent. Uh, there's because the dollar and the index markets and the major pairs have been out of sync, right? Everything is pretty much mixed up. You can't seem to get a clear or a clean read on price action. So if whenever price does that, whenever price is out of sync, we want to be staying away from the market. So with that being said, I'll catch you on the next review.